All right, let's begin. So I'll pick up where we left off in the previous video. So it was the Ethereum trade, right? Yes. So firstly, let's take a look at what we talked about in the previous video. So the trigger for Ethereum long was once we get a break above this high, we would buy any pullback into the 2.4k region and expect 2.3 to hold with a target of 3.2. So the target was 3.2, stop was 2.3, and entry was 2.4. All right. That is about 5.6 R. Let's see what has happened in real time. So yes, it has worked out beautifully for us. Clean break above this level or this high, pull back into the 2.4k region, 2.3 as stops, hold, and the target is hit at 3.2k. All right. One thing that really, uh, I don't know, caught me by surprise would be the right term for it, but I did not expect the market to come into 90% drawdown, or rather, I did not expect myself to come into 90% drawdown with this trade. You know, I just expected the market to take out these lows and then move back up quickly, but it came in there. And once the week opened, I thought I would probably be stopped out this week and the market is going to go towards the last month's low. It didn't, right? It picked up midweek and then went straight to target at 3.2k. That was quite nice. One thing I want to talk about is if you look closely, there's actually a level here, right? So this is a very clean level. This was resistance there, then becomes support, access support, and then the market sells off. So if I am expecting the market to go up, I should have accounted for that resistance and closed some of my trades, or rather my trade, some of my position or the whole trade here. Why didn't I do so? So there's a concept called as premature selling. I mean, I just came up with that term, but it works. Okay. So when the market came in there, I assume that it is actually testing this resistance level. I don't want the market, or let's say, I don't expect the market to go all the way there and sell off. Okay. That is for the books, right? That is for the textbooks. But in here, I would expect when the market comes in there, yes, it is testing that resistance. It not only tested it once, twice, thrice, four, almost five times, I would say. It was consolidating below this level. So I said that if and when the breakout happens, it will not respect this resistance level. It would go to the next key SR level, which is the 3.2k. So that was the whole reasoning behind going for 3.2 as my TP and not 2.9. Okay. So if you zoom in, you'll see that the market did consolidate there for some time, very short while. You can see that there, and then it just goes through that level and keeps on going up to people's disbelief. And yeah, 3.2 is hit. So that's it for the Ethereum trade. The idea for that trade was quite simple. I'll go over that again. So market aggressively comes down, holds on to that low, right? Punches in a new high, comes in, holds on to that low, punches a new high again. At that point in time, I said if we get a breakout about there, we expect that low to hold, and then we expect 3.2 to get hit, which it did, right? That's it for the Ethereum trade. Moving on to oil. Okay, I don't care about the Ichimoku. So yes, this was the oil trade from previous to previous week. Okay, not previous week, previous to previous week. This was the long on oil, in where again same pattern. Aggressive low is formed, high, low is held. We get another high. So when the market came in there and started moving up at a break of market structure, actually this was a trigger to be honest. Higher high. I expected this low to hold and the market to go and target this high, and I expected the market to go all the way up to 82. I think 82 is my target. Oil didn't do that, and I actually had to close my positions last week because the swaps and the weekend charges were quite absurd. And it's thanks to the proprietary firm that I trade with, but that's fine. You know, story for some other time. So I've gone long on oil again. Yes. It is due to this triple swing pattern. So triple swing is nothing but you form a low, the next day you take out that low, but you close above the low, and the third consecutive day you do the same. That is called a triple swing. You could apply that concept on the daily, weekly, or the monthly. The higher the time frame, the stronger the, I would say, the more credible the pattern, right? So I actually shared it with the community in the community. So there's a triple swing. Triple stop on oil, opened a new long. Triple stop, triple swing, you could call it anything, whatever you want. So yeah, that's the trade on oil. And actually I've gone long somewhere in there. Yesterday I went long there, and then after that we had a bit of a pullback, and then it's now gone up quite nicely. But we'll see. It's been 20 minutes since the stock market opened. Let's see how oil reacts. Target remains the same for oil, but if I have to close this, let's say by tomorrow, because tomorrow is Friday, right? If I have to close this by tomorrow EOD, my targets would be there. Or whatever the close price I get towards the EOD, I'll take it. I am not holding this trade through the week. Again, thanks to my broker. So, what is the idea on oil, right? It's the same as it was on Ethereum. We have an aggressive low forming. We have a high. We have the market holding on to that low. We have another high. When the market comes in there, I expect this low to hold. It did make a high. This is the gap down that caught me by surprise, but then we had a affirmation by the market that yes, this low has held. Towards the end of the week, the market drops again to the low. Now, this was not expected, and this is starting to become more of a red flag to my trade. So I'm not sure whether the pattern that I called last week has the same kind of validity this week. So yeah, that's about it for oil. The reasoning for oil long is a triple swing, and again it's also the similar, or rather the same reasoning we had 2 weeks ago. Okay, whether it works out or not, we'll see by Friday EOD, or maybe towards the end of this month, right? Moving on to the asset class that I am actually very interested in, or not the asset class actually, the asset or the currency that I'm actually interested in is the dollar. I just love the dollar. So I've hidden all the drawings because I want to take your attention to something that grabbed my attention a year ago. This is a range on dollar which has been holding the dollar for about 2 years. This is where the market or the dollar showed that it's about to break that range, right? But it didn't. And somewhere in there, Trump gets elected. Think about it. The markets are at a verge where they're about to break a. The dollar is at the verge where it's about to break a 2.5 year long range, right? I would say the anchor formed somewhere around in 2022, and now we are heading towards 2025. What would set this breakout apart from all of the previous failed attempts? Think about that for a second. My question is, what would set this breakout apart from all of the previous failed attempts? It's probably the tariffs, or the anticipation of the tariffs that US might impose on the countries that are going for the de-dollarization. All right. So I think it would be a wise time to rotate into the dollar, if you have not already, because once the market held on to this low and it went back inside the sort of 101.5 region, it was a clear signal that this is again a deviation, right? Let me draw a range. So that's where most of the price action on dollar is happening, with this being the high there and this being the low. Deviation, failed breakout again, comes in for a test. This time goes in, tries to break down, gets back inside. Trump gets elected, and it's now gone for a breakout. Yes, it is gone for a breakout. So my question is, what validates this breakout? I would say Trump being elected and the anticipation of the tariffs, which could break the dollar and take it outside of a 2-year long range. And when currencies go, they go quite quickly without giving you any kind of an opportunity of a entry or a re-entry. or a pullback. So yes, in my opinion, dollar long is a good idea. And yeah, this is the range that I had drew, I think 2 to 3 months ago, and I think it's breaking this time for real. So rotating into dollar, I think it's a good idea. Yeah. So dollar long means euro short. I haven't I haven't planned a euro short yet, but I might think about it soon. Uh, so that's about it for from my side. Yeah. Thank you very much.